In today's video, I'm going to toss out a scenario that I don't think anybody is currently anticipating. I don't know if it's way too early at this point anyway to say for sure, but I want to look at the currency. So the dollar seems to we get these long periods of sideways consolidation. Then when you get a breakout, the breakouts can be retested, but they tend to hold. So you can see we had this resistance here at about, let's call it $89. When we finally broke out above that, then we kind of transitioned into this sideways churn in the 89 to about, let's just call it 104, and then we've broken out above that. Now I think virtually everyone is anticipating that the dollar is going to ultimately come up and test these highs at about 120. I think everybody's just betting that's a sure thing. And in this video, I'm going to question that assumption. So, as you can see, price this is a weekly chart, but it's kind of it's stretched as well on the daily charts. So this is the 200 week moving average, but price is also stretched way too far above the 200 day moving average if I was to convert that to a daily chart. But I've shown examples of what happens when things get stretched too far to the upside or downside, above or below the mean. They generally you get some kind of a really vicious regression event. That happened in the energy stocks. It just happened in the stock market. I've shown that multiple times where stocks were just stretched way too far above the 200 week moving average. Actually, I can put that in here real quick. So here's a perfect example. The QQQ just stretched way too far above the 200 week moving average, and we've had this semi-crash event that has brought it back down to tag it. Now we're moving back up. My assumption at the moment is that this is a bear market rally, but let's go back to the dollar. If the 3-year cycle in the dollar has topped, that assumption that stocks are in a bear market rally may be wrong. So here are the 3-year cycles. So here's one cycle right here. This was a very volatile cycle as we were coming out of the Great Recession and the market crash and bear market. Very volatile 3-year cycle in the dollar. And then the next 3-year cycle, it right translates, which means that it tops right of center. It rallies for more than a year and a half. And then we get our bottom right here. This bottom holds well above this previous 3-year cycle low. And then we get another fairly volatile 3-year cycle, and it even stretches a little bit long. But we break out of this lower consolidation box and we move into a higher level. And then here's our next 3-year cycle low right here. Like I said, this cycle stretched a bit. And then we get another 3-year cycle that just churns in the box, doesn't break out to new highs. But it does right translate, and it followed the rule in that a right translated cycle usually does not make a lower low, and that's what happened. The 3-year cycle low held above this 3-year cycle low. And then now we've got we're in a new 3-year cycle, and we're in the advancing phase. But my question is whether or not this 3-year cycle is going to right translate and like everyone is expecting, and eventually test this 120 zone up here. I think, like I said, I think everyone expects that to happen, but I'm wondering if the dollar is going to do the exact opposite of what everybody is suggesting. So I'm watching this support zone. Let's call it 104. I'm watching this support zone. It's pretty clear that the dollar has started down into an intermediate cycle low, and that move is still pretty young. It should, in theory, we should get some kind of a bottom. Maybe we bottom on this support zone here at 104 and bounce. We get our a bounce out of a daily cycle low, and then that daily cycle left translates and comes back down. And I'm going to say that if the dollar were to break back down into this box, then this turns out to be a false breakout, and it is occurring very, very late in it's even hard to call this a completed intermediate cycle low. It didn't really meet a lot of the parameters that I would need to see for a larger intermediate cycle low, and if that's the case, then this is the last truly completed intermediate cycle low down here, which means this cycle is stretched at least double, almost triple what a normal cycle would run, and that would mean that we're getting a breakout that is occurring very late in an already extremely stretched cycle, so the odds are not great that you get a sustained move. So the technical setup is there for this breakout to fail and for price to come back down into this box, and again stretched way too far above this long-term 200-week moving average. So there's a possibility, just like stocks, just like energy stocks, of a violent regression event that comes right back down to test or even probably drop below this moving average. Usually when you get an extreme stretch one way or the other, price doesn't generally just come back down and to the mean and stop and then go back up again. It usually, kind of like a pendulum, the further you pull it to one side, the more it kind of goes to the other side. So it's not out of the question that this could fall and drop below this 200-week moving average, maybe a long ways below it. And then here's the kicker, in that if this is the 3-year cycle top, it has topped kind of right on the verge of being left translated. And generally left translated means that the market has enough time to move down and break below the previous cycle low of the same degree. So if this is a 3-year cycle that is preparing to left translate, the assumption would be that we'll probably get some kind of a crash event to come back down and test this 200-week moving average. That would probably be our intermediate cycle low, and then we'd get some kind of a bounce off that. That would be a major support zone. So we'd get some kind of a bounce, but the bounce would probably not be able to come back up and make higher highs. And then we would start another left translated intermediate cycle that would come down and break below this low. And if that's the scenario that I don't think anybody is anticipating. Again, I'm not guaranteeing that this is going to happen, but I'm just saying it's a possibility and one that nobody is anticipating. And if that happens, then no, we are probably not in a bear market in stocks. The move down into the 3-year cycle low, if that is what is beginning, will probably support the stock market, and we would probably go back up and at least test the all-time highs and maybe even break out to new highs. But more importantly, I think for most people, is I think that would have a very powerful effect on gold. So we're still in this cup, and we're still trying to form this handle, and everybody has got despondent. The level of frustration and despondence in the precious metal sector was every bit as extreme right here as it was back here, and you can see what that kind of sentiment, the fuel that it produced to power a huge move, and basically built out the right side of this cup. We've had that same level of despondence and disgust, frustration right here as we did right here. And when you look at the long-term picture, I mean, when you're focused on the day-to-day moves, this just looks like that there's no way that gold can ever go back up. And you know, I've proven myself over and over and over and over on this. You know, I'm usually the only one trying to call these intermediate cycle lows when everybody else says that markets can only go down. I'm the one telling you that, you know, we're late in a cycle and it's going to go back up. I was correct when I said that about stock market. I'm correct again here when I said this about gold. And you can see what we've done is over the last 2 years, all we've done is gold has just turned sideways and allowed this 200 week moving average to catch up to price. And then we tested it right here. Now, my assumption right now is that we've built, you know, plenty of fuel with the negative sentiment to at least come up and test these all-time highs, but I'm kind of expecting once that happens, we'll have more attacks to try and stop the move, and we'll have to come back down one more time before we take off and break out of this handle. But I may be wrong. If the dollar has started to move down into the 3-year cycle low, then it's very possible that gold could come up here and test these all-time highs fairly quickly, like maybe even during this first daily cycle. If gold can get all the way up to 2,000 during this first daily cycle, then there's plenty of time for a sustained breakout above this level, and at that point we could be looking at the breakout move from this cup and handle pattern. Now, again, this all depends on the dollar. If it has started the move down into the 3-year cycle low, then we've got about 1.5 to 2 years of the dollar dropping, and that would give gold, it would give the CRB, it would give the stock market plenty of time to rally up and break out and make new highs, especially in gold. Probably in oil, I would think we would eventually turn and go back up and test those all-time highs at 150 and probably go far beyond that. It would certainly, I think, power the stock market back to new highs and maybe even a breakout to new highs. So I think a lot is dependent on whether or not this breakout above this long consolidation box fails. And it's setting up that way, it looks like to me anyway. Let's see if we can shorten this just a bit. Maybe let's move it to the daily level. So I think I've drawn this before as well. We're definitely moving it down into a daily cycle low. We've broken this trend line. We've not been able to recover that trend line. So this is a move down into a daily cycle low. So my feeling is that maybe this daily cycle is going to continue down until we kind of tag that support zone of that lower box, maybe at 104. And then that gives us our daily cycle low. And then we get a more lasting bounce, something that lasts 8 to 10, 12 days, but does not make a higher high, and then rolls over again and starts another complete daily cycle, but one that's left translated and that takes us down into an intermediate cycle low, probably down to or below this 200-day moving average. And if that's the case, then, like I said, this would be a failed breakout. And it would catch everybody thinking that, the dollar's going to 120. It would catch everybody on the wrong side of the boat. And instead, we may be starting the move down into the 3-year cycle low that would have another 1.5 to 2 years to run. So that's kind of what I'm looking at. I want to see, first off, if the dollar finds support right here in this lower consolidation box, and then if the rally doesn't make it very far and then rolls over and then really starts to move down aggressively into this consolidation box, then that would be the confirmation that the dollar is in a 3-year cycle decline. And in that case, I don't want to be short anything. I don't want to be short stocks. I don't want to be short gold or commodities or oil or anything. We would be moving into an extremely inflationary environment. And I think gold bugs would be very well rewarded in this scenario. And I think all of the manipulation by the cartel, it would just make the move even that much more extreme as the metals break that manipulation. Gold and silver have already won the battle. They've already confirmed that we're in an intermediate advance. It's just the miners now need to also break free of that manipulation. And at some point here, I think they will, and we'll get a big week, one of those 7 to 10% up weeks in the miners, and that'll be the last suppression to break in the metals market. But so something to think about here. We'll keep an eye on the dollar here, and if it drops back into this consolidation box, I think that's a pretty good sign that the 3-year cycle in the dollar has topped, and we're now in the declining phase and another severely inflationary phase that would probably power everything higher.